format of purchase ledger control account. Here is debit and here is credit. So the purchase ledger control account is the opposite of the sales ledger control account. That is, this is the main balance. Sales ledger usually comes with debit balance, normal circumstances, and purchase ledger usually comes with credit balance, the normal condition. Now, this debit side will be minusing just as we did at the sales ledger control account. This is our balance that we are to pay our creditors. Then we will be, whatever we pay will come here to be lessing the amount that we're supposed to pay. That is, we're settling. We'll be settling our creditors here, and it will be reducing the balance that we have here. That is simple as that. Okay, let's say this is our balance, currency side. This is our balance brought forward. Then, at times, the purchase ledger might also come with debit balance, just as we did for our sales ledger. You can see balance BF. It might come with a debit balance. It might come with a balance brought forward at the debit side. Maybe we made an error of payment or something of that nature might warrant us to bring the balance here to affect this our balance that we are to pay our creditors, our suppliers. So in that case, we will have balance brought forward. But usually it's a small amount. Usually. This is the main balance. It will be large, a very big amount. It's the same to this. Since this is a debit balance, the balance here will be large, very big, and here will be small. It's the opposite. So control account is a simple account that the treatment is very simple. So now this is our balance to settle the creditors or the suppliers. So now whatever we pay to these our suppliers will be clearing off this amount that we ought to pay to our suppliers. So, and these are the items that reduces our purchase ledger control account, because we already have something to pay, amount to pay, just as I have explained. So now whatever we put here will be minusing, will be reducing this balance. Whatever we put here will be adding to our balance to pay the creditors. Now, we say bill payable. We pay bill payable, payables, cash or check to creditors, discount received, we receive discount. It's the same thing with this sales ledger. Return outward, we return goods to them, it will less our amount to pay them. Return outward. That is set up the balance. Then transfer and set up are almost having the same treatment. Now, anything that will be here will be added to your balance. to pay the suppliers. We buy again, credit, purchase, it will add to our credit. Bill payable. Bill payable dishonored is the opposite of all these items. It's the opposite of all these items. It's the same thing with the sales ledger control account. Bills dishonored. Dishonored. Bills dishonored. Check dishonored. The same thing is control account is a simple topic in accounting. Check dishonored. Dishonored. Cash refund. Refund from creditors. Error of undercast. Error of undercast. Nothing charges. This nothing charges, it means you place a notice to the supplier that you need so goods, or they should keep a particular item or goods for you. And based on the agreement, you're supposed to come and pick this item, say in 2 weeks' time. And after that 2 weeks, they will be charging you. That is what it means. So whenever they are charging you, it will be added to your balance to pay the creditors. Transfer. I've explained all these terms. Transfers. So another thing again in control account is the balancing. In control account, you will not add the debit side and the credit side and compare. Normally or usually in the equation, a balance of both sides will be given to you and you will add it direct, but it must give you the same amount in control account. Say a debit balance was given to you in the equation of sales ledger control account, and a credit balance was also given to you in the equation of the sales ledger control account. The same thing to the purchase ledger. A debit balance was given to you and a credit balance was given to you. So the issue here is you will come and give a line space. A line space. You also come here in the same line, straight line, like this. I hope you're getting it. So now, if the question says a debit balance of the sales ledger control account was so amount, you come here, a debit balance, you say balance BD brought down of that amount given in the equation, let's say CC. Wherever you see balance BD, it shows the balance of the side of that particular account. If you see balance BD here, it means that is the credit balance of that account. If you see balance BD at the debit side, that is the balance of the debit side of the account. Simple as that. Now, you cannot brought down a balance without having a carried down balance in accounting. So that means here at the end, you'll be having balance carried down of this amount, CC. I hope you're getting it. So this CC will be brought down here. In the equation, they will say a debit balance. Don't put that debit balance here. It means the balance brought down, just as I have did now. A balance brought down is the debit balance. Then you cannot bring this balance down without having a balance carried down. It is this balance carried down that will be brought down to your debit side. So if the question say a credit balance of the sales ledger control account. Since it is a credit balance, you come here and say balance, the same thing, BD of CC. Then their A must, is under must, be balance carried down of CC. It is this balance that you brought it down. That is all. Then you add. It will give you the same amount with this and this. If you do not get the same amount, you are wrong. It must be the same. So you will get X, X, CC, X, X, CC. So the same thing to this purchase ledger. You come here, give a line space, do like this. Also come here, a straight line. So if the question say a purchase ledger control account, debit balance of so amount, a debit balance, you come here and put your balance BD of the amount, say CC. Then there must be a balance carried down. For the balance to be brought down, you say balance CV of CC. It is this CC that was brought down. Now, if it says a credit balance of CC, you say balance BD of CC. And A must be balance carried down. It is a must. Balance carried down of CC. So you add it all, you will get the same amount with this and this. That is, the debit side and the credit side must agree, must equate. You say X, X, CC, X, X, CC. That is all. That is all about control account.